Trading and investing can get very emotional. As soon as the good news comes out, everybody wants to get in. And the headlines don't do much better for people. They pull people in, typically at the wrong times. Social media is wrought with stories that say infinite wealth is coming. And that is absolutely the case. Infinite wealth is coming, but unless you time it correctly, you're going to be in problems. I'd like to explain a trade I've done across the past 3 days. Inside these 3 days, I made about 4,000 profit per day, and this is on Bitcoin. You'll notice this was the screenshot where I sold. I sold right there when it came up to 122. Now, why the hell did I sell there? And what happened next? You can see I sold here. I didn't pin the exact top, but I wasn't trying to. And it's come down. You'll also notice I've started to layer back in, and that's been done at structural levels. In this video, I'm going to share my thoughts about this specific trade, and I'm going to help you to understand how not to get burnt by green fire. I do talk about it a lot. This green fire is the thing that pulls in retail to get slaughtered. If you've been slaughtered by green fire, please put the words green fire into the comment. Now, a lot of people don't share their trades. I'm sharing my trades with you if you want to dive in. I do have a very secret weapon. Whenever I trade or invest, I go to @CTKS Method. That @ is really important. Make sure you pop it in. And I go to playlists and I play these 18 songs. It's absolutely free and it's absolutely awesome. This is a new channel that I've just created to share this music with you. Please make sure you subscribe because more music and more mindset videos are going to be popped into that channel. CTKS traders are very aware of structure inside the market. When we had that green fire candle, we saw Bitcoin was around that 122,000. It just came through all of this overhead structural resistance, and it was looking like the VIX was also starting to pop, as well as the futures were coming down in the major market indexes. I said it's about time to get out. That is why I sold, because I didn't believe that this structure was going to get obeyed. Trading is always about to make money and to lose small. Now, why would structure get disobeyed? It's because of two factors: intercorrelation and interconnection. Bitcoin cannot escape the US market's gravitational pull. If the US markets are coming down, Bitcoin will also come down. This is a fact. It hasn't taken long to basically wipe all of that profit out. So many people would have been caught up here. When it comes to trading and investing, you do not want to buy on green fire. You want to be stacking in the red and exiting in the green. But this is incredibly difficult to do. For example, when I sold here, did I realize that Bitcoin could keep on going up? Maybe it put in a God candle and I'd be left behind. How would I cope? How would I deal with that? After all, I was stacking positions all the way down, and you notice I very rarely just buy as price is going up. I always seek to buy retracements. This is an example of retracement trading in a consolidating and positive trend as well. I could have gone in more, but I was happy with what I had. The more you get into the green fire areas, the more that you can get burnt, because you get into the wrong side of the percentage. Tails just recommended that I shared this particular post with you. 99% of traders on this app say, yeah, so price went up after not going up, so therefore it can go up again. Excellent analysis. Now, the problem with this particular quote, and it's a way that people do think, people think that they buy the dip and it is always going to go up. Not necessarily. This is why traders have a huge advantage. Another thing to think about, when I was buying Bitcoin around here, notice that these positions went into loss. They were all loss-based positions, especially this one, and then they turned into profit. Now, why did I have the confidence that Bitcoin was going to turn around? I believe that because of the news that 401ks were being opened up. So basically retirement plans. We were going to see a retail spike before a retracement. And why am I buying here? Because I believe a huge number of people are going to be buying the dip. They'll simply say, just like that dev said, they'll simply say, no, I don't know what happened, but I'm just going to buy the dip. I don't need to think about it, I'll just do it. One thing to help you with your profitability, you must think what retail could do. But one of the most important things is to just primarily look at structure. If you have big up waves, those big up waves, they go through structural resistance levels. And it gets harder and harder and harder to do that because there's so many sellers at this level. Eventually the buying runs out. And if you do not reconfirm, you are likely to go down. You might remember in yesterday's video, I said if the VIX crosses a specific level, be careful. The VIX crossed that level, I was out. I'm specifically talking about the cheat sheet, which is available from CTKS Method, completely free. It's really good to fill it out. Now, what we've seen in the last 24 hours is this, a big spike up. Now, this reminds me, unfortunately, of this big spike up. It was followed by a sweep of a lot of liquidity inside the market. If we got a sweep like that, it would push us down to 115. This would be outside the realm of most people's thinking right now. I suggest that you put it on the radar. If we get down to 115, that is a fantastic opportunity to stack up. I believe the next couple of months are going to be pretty wobbly. We could have a lot of up and down action, a lot of volatility. And towards the end of the year, I think we're absolutely going to rock it. The reason that I could lock those profits in was because I was looking at the cheat sheet. The cheat sheet is 7 rows of charts that we mark up from a structural perspective inside the service. And for the service members, the monthly video was released a couple of days ago. When we look at row 1 and row 2, these are the risk on, risk off rows. The VIX is incredibly important to look at. If you don't understand the VIX, you're in a world of hurt. Basically, the VIX dictates from an inverse perspective where the major market indexes go, which is row 3, and also where Bitcoin and total crypto market cap go. Now, Bitcoin and total follow each other pretty much to the ping. So if total is going down, you can bet your bottom dollar pretty much everything else inside the crypto market is going down. After all, it's total crypto market capitalization. From yesterday's video, I said be very, very careful. If we start to get above here, the VIX will look like it's starting to turn around. If that is the case, we would expect Bitcoin to sell off wildly. I also said to keep your eye on the DXY. Now this is out of row 1. So row 1 is the VIX, the Dixie, dollar yen, the 10-year, the 2-year, and oil. This big spike up in the DXY is what I refer to as an intention spike. It intends to go up there. And that's why I said be very careful if we don't continue down inside the VIX and we start to do something like this, be careful. This is why the daily cheat sheet is your absolute guide. It will keep you out of so much trouble financially. But of course, you must know how to read it properly, and then you have to act on it. Don't forget, as Bitcoin was putting in that green fire, everything looked good. And I must admit, I had that feeling of, am I being a little bit stupid here, adhering to these concepts of the VIX spike coming in and seeing that the DXY had the potential to rocket? No, absolutely not. When people make losses, they typically make losses because it is really emotionally hard. For example, it's emotionally hard to stack under loss conditions. It's emotionally difficult to sell when prices just literally put in its own little mini God candle. And the potential is, yeah, it could go much higher. But what do I do in a position if it did go higher? Guess what? I just get back in. But I already knew the market was weakening, and I'm going to show you a couple of other charts that you can keep your eyes on. It's going to be important to understand how to read the market. And I would really urge you, make sure that you go to this channel and play this music. This music will rewire your mind. One thing that we can see on the close of the S&P 500, it's the very starting point of a degree of weakness. If we close under here, we really need to be careful. In other words, the next session for the S&P 500 is really, really important, and the CPI figures are going to be coming out and they will be hotter than anticipated. I also explained a little bit about row 2, especially junk bonds. Be really careful if we don't get above this 96.74 level. If we start to come back, that's not necessarily a good thing. And if we do a underside retest of this 96.65, that's actually pretty shocking. These are still levels that you need to keep your eye on. And also, what I mentioned was gold and silver tend to lead the direction of Bitcoin. You can see that gold has come down, silver has come down as well. We also talked a little bit about row 3. And inside the S&P 500, I said a lot of people will just say, oh, the overhead resistance is just here at 63.93. Well, it was actually higher at 63.97. Just because we spike through it doesn't mean anything. It matters what happens on the way back. Do we confirm it as support or does it sell down? It is selling down. The key is always to look at the structure. CTKS structure is the world's most statistically advanced structure in existence. It tells you where the algorithms are going to buy and sell across any price chart. It is undeniably powerful. And you can see I use it. This is what I use to make the money that I make. What has happened inside the crypto market? We've seen the green fire played out, burn a whole hell of a number of people, and it's come down. What about Bitcoin? Yep, exactly the same. So total crypto market cap, Bitcoin has come down. What about Ethereum? Well, Ethereum was a little bit of a late bloomer. It tried again and it's getting pushed down. No alt can resist or withstand Bitcoin's gravitational pull. This is something that you must know. This is a rule inside the crypto market. What about Litecoin? Litecoin has been getting weaker. Bitcoin Cash getting weaker. Binance Coin is staying up there, well done. Ethereum Classic not really following through with the power of ETH. Now, what does this tell us? This tells us quite a few different things. Litecoin and Bitcoin Cash tend to move before Bitcoin moves. So if we're expecting a turnaround, we would expect Litecoin and Bitcoin Cash to go up. This is not the case, but there's a lot of people interested in getting into centralized exchanges. When we look into row 7, and the structural indicators are on here, we can see ADA just failed to manage to get past that 79.50 area, and it's come down to 78.09. Now, the issue at the time of the recording of this video, if Bitcoin continues to come down, you know that ADA will continue to come down. Look at the directional momentum. The blue line is Bitcoin. And of course, the candlestick chart is ADA, Cardano. What about Solana? The same kind of thing. The issue is you must always be aware where the structure is, but the direction and momentum of the crypto market. And you can only understand that if you understand intercorrelation and interconnection. So when we look at Dogecoin, we didn't get above that 23,200 mark, we failed, and we're moving down. With Bitcoin, Bitcoin is pulling the entire crypto market down with it. When we look at XRP, you can see this really big line here, that's very solid. Structural support now turned into structural resistance. That's the 318 mark. We realistically need to see Bitcoin just turn around and get above. XRP needs to get above this 318 level. Now, what if Bitcoin continues to go down? Can XRP just go up? Unlikely. Unlikely for all of them. It is absolutely CPI day today inside the US, with the CPI month-on-month come out core and the normal, as well as the CPI year-on-year. These are all expected to get hotter over the next 3 to 4 months. One thing to understand about the media, they're always looking for a headline to get people to click on the articles. They'll say everything is caused by the CPI. The truth is, institutional players already know what the CPI is likely to be. It's going to be hotter than anticipated. One of the things that I was looking at when I looked at the S&P 500 futures, the Dow futures, the Nasdaq and the Russell futures, all of this green fire I sold around here. Why? Because the S&P 500, the Nasdaq futures were starting to get really weak. And that's because the VIX was starting to spike up. When you understand the intercorrelation, interconnection, and you can pull the trigger either to buy or to sell, you're going to do well. If you find that your emotions are ruling you, if you just can't hit the buy button, you just can't hit the sell button, I would urge you again to listen to these tracks. These are specifically trading and investing tracks, and they give you literally decades and decades of wisdom to a kick-ass beat. The thing to note here, until this turns around, we will be under negative price momentum, so it's just something to be aware of. One thing with the longs and the shorts, and this is just from TM19 from the Masterclass, you can see the the longs are getting a little bit more excited. They were starting to flatten out, but they're starting to buy the dip. And what are the shorts doing? They're starting to close out on their positions. So this potentially means we've got a little bit of buy the dip action, and the shorts have made some money, they're closing out their positions, and they're getting ready to go again. There were actually a lot of liquidations in the past 24 hours, literally $500 million worth, marginally more longs than shorts, but not by a long shot. There's nothing wrong with going long or short inside a market using derivatives if you're an expert at spot. You must have the expertise or you'll get wiped out, for sure. The best way to avoid being one of these numbers is simply not do it until you know what you're doing. If you do not know structure, if you do not know intercorrelation, interconnection, God, please do not touch leverage. You're going to get whacked. Tales from the Man Cave, and you can follow him on X at Tales of Man Cave. Tales did a really good analysis on CleanSpark. Well done, my friend. And a call out to all the ambassadors. You guys are awesome. Anybody who's been inside the crypto market for any period of time knows that these charts, they look so cool, don't they? They look absolutely awesome. But this particular drawdown is absolutely wicked. It's like a 90% drawdown. These drawdowns are absolutely severe as hell. And the point is that people buy on green fire, and therefore they're likely to get concentrated around the top. They're likely to experience a literal wiping out of their portfolios. That is the risk for investors. We do not suffer those risks as traders. Well, depending on what kind of trading you do, but if you do active trading, you'll never get caught in one of these kind of drawdowns. And inside the service, I provided 3 trades just that were made literally in the days leading up to the service release to show you can make money in any market condition. And those particular trades that I showed were in Pepe, and Pepe came down 25%, but I go long at spot. Sometimes getting an idea of max pain can be really good. And one thing to just notice, at the end of the month, we expect max pain to be around the 116,000. And next month, we expect max pain to literally be 100,000. This could potentially give us the insight that over the next month or so, we may see a fairly sharp decline. One thing to also note, when Bitcoin goes down 1%, often the alts will go down 5%. Realistically, it depends on which alt it is, but the issue is there's always a gearing factor between Bitcoin and the alts. Therefore, just going back to why I sold when I sold, I knew the cheat sheet, I continuously looked through it. And I look through it with the methodology I share in the Profiting Masterclass. I also have my secret weapon, which are these songs. They are unbelievable. The other thing to keep in mind, you have to be strong enough to pull the trigger when things align, which say that you should do that. That is not easy to do. It does take a lot of experience and a lot of practice. And something a little bit interesting, just on that very note, you can see that I sold down here and Bitcoin went up. I didn't FOMO back in and start buying. Now, how do you know I didn't do that? Because you can clearly see where I buy and where I sell. Those little green arrows and the little red arrows, they give it all away. And I like to show you trades like this. They are uncensored. What could potentially happen in the next 24 hours? Well, people are going to get pretty much freaked out until they feel that things are turning around, it's come down enough. Yeah, I think it's a good time to get in. And that might be around this $116,000 area if we get a continuous sell down. But the only way we can actually tell what is a good level is through structure. So you can see already the structure that's playing around this area, that is a very strong level of structure. And also don't forget to read and cross-read total at the same time. This is what I do just on a daily basis when I do my trades. I hope this has been helpful to you and you can understand that you can scale in at a loss. That means you're doing it correctly. And when you get out and there's potentially more room to move up, that is also called the sweet spot. If you find that things are just repairing and take off, for example, the futures turn around and the indexes rebound and all of that, you can just get back in. No harm, no foul, no being right, being wrong. Just give all of that stuff a break because it will absolutely mentally crucify you. Please let me know, would you like me to bring out more mindset videos and more analyses on different books? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again inside the next video. Bye for now.